I do expect this rally to continue into the end of the year, but this is one of the times when individual investors actually have the power. And we're recommending to clients who have huge amounts of cash to deploy that cash gradually and to not feel pressured to chase these returns. Especially in US large cap growth stocks, stocks are overvalued by almost every measure. And that doesn't mean that with the huge amount of cash on the sidelines and with a very active retail investor that this couldn't continue for a while. But we're counseling patience.
So patience is a virtue, sometimes a necessity for many investors out there. If you look at the way it's developing right now, we haven't really seen a major pullback at all over the course of the last several months here, certainly since the pandemic lows that we saw in March of last year. Is there any kind of a pullback that you're looking to target for people to deploy that capital patiently, in your words?
At this point, where I would be happy with a pullback of 5% or more. And we saw that in September, right? We certainly haven't seen a real correction of 10% in a very long time. But what we're seeing every time we see a substantial, 4 or 5% correction is that retail volumes pour into the market. That's been a consistent pattern. So I do think part of the problem is that there are no alternatives out there, and you still have very active traders who became active during the pandemic, and are just watching for an opportunity to put more money into the market.
So what's then on your shopping list then? If you're waiting for some of those pullbacks to happen, are there certain specific companies that you eye as being ones that you would pick up if they do drop in value by whatever that 5 to 10% mark that you're citing here?
Yes, absolutely. First of all, international developed market stocks are still trading at about a 30% discount to US stocks. But in terms of individual stocks, there's a subset of companies that IPO'd in 2020 that got caught up in the retail euphoria and shot up in price and then subsequently fell in half. And I would give you an example of Big Commerce, which is a small cap growth stock, part of that Russell 2000 that you were talking about previously. And it shot up to between $60 and $70 a share, now is trading in the 50s. And after its second quarter earnings, its sales actually surpassed expectations, but its loss per share missed. And so it dropped precipitously in price, and we picked up a lot of it. And then I think our expectations were proven out in its November 4th earnings. And, that company has been increasing revenue by 30% per quarter for 7 consecutive quarters. They've got a very disciplined management team. It's a Shopify competitor, but it's trading at around 20 times sales versus Shopify's 50 times sales. So that type of investment that's a disruptive growth stock, there are definitely still opportunities out there.